What's up, everybody? It's Chris. Today we are going to be looking at price action. The main point of today's video is that price action trumps all. So to get into what I mean by that is, I think it's easy when you start trading to really focus on these indicators, the moving averages, VWAP, whatever it may be, and you forget that these indicators are all derived from the price. They're derived from the candlesticks. Moving averages are specifically derived from however long the period is you select and the price during that time. Exponential moving averages, obviously, way more recent pricing, heavier than older pricing. Simple moving averages do not. And so, I mean, from that right there, you can see that these moving averages, these lines, are pretty much just better visualizations of the average price and what's been going on with the price action recently, specifically in terms of the dollar amount that it costs to purchase the underlying. Obviously, with options, there's an added factor of time, which is a little bit different. But when we're specifically talking about price action, we like to talk about, obviously, the price, the volatility, and the volume. So, again, moving on from moving averages, like VWAP deals with price and volume. And so that right there is just another derivation of our price action that we're paying attention to. And so what I'm trying to say by this is that, well, first, I want to compare this a little bit. Sometimes people in the group are talking about how certain stocks in the market are going down, or talking about how SPY is going down and how that should bring down other stocks. You just aren't understanding how the transfer of money works in these markets and how an ETF works. So an ETF is a collection of underlying stocks, and so if those stocks are soaring, the ETF will follow. So you're thinking about it backwards, and I think that's kind of the thinking here with price action and these indicators, is you are looking at these indicators and hoping that they will tell you what the price is doing when you're thinking about it backwards. The indicators are made up from the price. So eventually when you grow as a trader, you're going to be looking at the price and not necessarily be able to say and calculate in your head, okay, this is where VWAP is, but you can see the increase in volume. You can see the bounce off previous support. You can see that the trend is changing, and that, I mean, here, what we've talked about in previous videos, when you think about mentally, so when the 20 is above the 200, the last 20 days have been more bullish than the last 200. And when you get the crossover, obviously that changes and goes vice versa. But so, like I said, these are visualizations of the price action. So obviously they're good to see these changes in trends, and they're good to check to make sure maybe you're not looking back far enough on a far time frame and you think we are very bullish and we are actually not. But what I'm trying to say here is that price action makes these indicators work. That is the inputs for these lines. And so as you grow as a trader, you really need to pay attention to price action and how price action moves, because, I mean, that is directly related to these indicators and where they are. And eventually, you don't really need these depending on what your strategy is and what style you trade with. But to some extent, for visual purposes, it's best to just have support and resistance, maybe one or two moving averages, and then focus on price. Again, this, like VWAP here, this is a good spot to see. If you're watching, say you were in a Tesla play that you played off the support here, I mean, one, you'd be up pretty solid. That's a pretty good move up. But you could use VWAP as a point of reference for where you could potentially see a reversal. And you see we broke it and we're coming back down, and you could wait and watch what happens. But again, that is something that this is visualizing what is going on with the price. So you need to understand that process, that these candlesticks, I mean, that's why we use candlestick graphs. That is something that traders forget a lot too, is these candlesticks tell us a lot. They give us the open, high, low, and close of whatever time frame. I'm on the 5 minutes, so within that 5 minutes. And so you need to focus on the candlesticks, focus on volume, volatility, and these are the things that makes up the indicators that a lot of you are focusing on before looking at the candles. So that is pretty much it. I mean, I just wanted to make a short video on this because I think that I get a lot of questions, and I can tell that you are thinking in that reverse way. You are thinking of these indicators trumping price action when in reality it's the other way around. It's all about the input. I mean, think about supply and demand. If there's no supply, nobody can buy anything. So this is what is giving these indicators the ability to be there. So I just think that's a process that sometimes people get backwards. I hope this video was helpful. As always, message me if you have any questions. Also, I'd really appreciate it if you could like and subscribe to the YouTube channel. It really helps with the algorithm, and we've really been trying to put out a lot of new content to help our members. I hope we have been doing that. We would love any suggestions. Just drop it in the comments. But as always, have a good day and stay green.